We are even I can trade. You will be assimilated. Your trading knowledge and distinctiveness will be added to our own. You will click the like button. You will subscribe to this channel. You will share this content with at least one other friend. Resistance is futile. Right, it is January 24th, and we have a little bit of catching up to do. I tried to switch over to a different editing software, and it actually ate my videos that I've been recording over the last day or so. So I'm going to try to condense the last few days into this video as far as our $500 challenge, which has been going pretty good. So stay tuned for that. I'm also working on some other projects for the Discord as well. So I want you to check that out, and the link will be in the description below. Let's get some catching up going on. All right, so I'm going to go back to the 23rd really quick, January 23rd, to see what our trades look like then we'll move forward. And I'm going to try to talk a little bit faster in these videos to get more content in. And also, I'm probably not going to be uploading quite as much because I have a little bit more stuff going on in the background. So I'm going to try to do a few days at once as far as recording these videos instead of trying to upload every day, because it's a little bit getting a little bit unwieldy on the background side. On the 23rd, you can see we had our two trades. This is a really decent day. You see the market opened up, pushing up pretty fast, and we broke through some major resistance right here at the 4,000 level. And the market has respected this line to a T every time it got close all throughout 2022. So this is the very first time that we broke through this particular resistance area, which is absolutely huge for the bull case of the market. Now, it's not complete. We have to hold the lows as well. We need to make a higher low, but this is really big for the market to not only break through but close above this particular level. So I'm really interested to see what we do from here. I saw that break, and when I saw that break, I was like, resistance becomes support. So that gave me confidence to go ahead and put in a trade on the put side, even though the stochastics was absolutely on the opposite side where I like to trade it. We are clearly trending in an up direction, so I wanted to catch the wave of the trend. I normally don't trade like this, but I want to. I really want to take advantage of that moniker, the trend is your friend. And we were clearly trending here. So once I identified that opportunity, I went ahead and took the trade. And then I saw us break through R2 here and start to wobble around. And that gave me enough confidence to go ahead and put in the call spread. Now, the reason I put in this call spread is because we were up so high already and started to waffle. I figured that I can get a call spread in here above 100 points. Now, this day we didn't really have a lot of news to go off of. So there wasn't really a catalyst that was pushing the market. The market was just going up because it wanted to go up. So I figured a non-catalyst day, the market has a low chance of getting up to plus 100 points on that day. We were already up, I believe, like 50 points on the day or something like that, 40 points, whatever. We were already up a pretty good bit, had already broken through this major area, broken through R2, broken through a lot. So I figured the market was going to tire itself out before it decided to get almost to 4,100 on the same day. So I went ahead and took this call spread while I had a lot of premium, put those trades on, and the rest was cruise control. So nothing to worry about. The market chopped around for the rest of the day and really didn't threaten anything for me on that particular day. The next day, which is today, January 24th, we opened up a little bit lower today with a little bit lower gap. So when the market gaps like that, you definitely want to watch price action to fill this gap. I was able to get this trade off Market was at 39.77, 39.97, 98 area. And I was able to get a 39.40. So a good distance away from the market, nice safety margin, everything like that. And I had a good angle of attack, or whatever you want to call this diagonal line. And I was able to get lower than my trade yesterday. So figured that was good. I was also able to get below S2, which I like to do if you read our guidelines. So pulled that off pretty well. And also the stochastics weren't in the best position, but they were on the low side. So got that trade pulled off. And also got this call put in a little bit later. So this was a little bit later in the day, about 11:30. I just really identified that we were just kind of chopping around, not really doing much. The stochastics was in position for me. Still had enough premium in the trade. It was a little bit lower than I like, but I figured at the time what we were going to follow was this particular yellow trend line that's coming up here. We were probably going to follow that type of an angle if we were going to go up, because this is new territory for the market. So I figured we'll probably follow this particular trajectory. So I plotted out a trade to get us above that general area, and that call got us at 40.55. I really wanted to get higher than this, but as I was trying to get into the trade, premium kept slipping away, and it ended up working out. We were able to basically get on cruise control for the rest of the day, and the market really just chopped around our little gap. It did end up filling the morning's gap, which it likes to do, of course, but it really just chopped around from there, giving us a win. Our test account right here, we're sitting at 952, making good progress towards our second contract. I might be able to even get the second contract now. We are right on the edge of being able to do so. But I think I'm going to wait till we officially cross 1,000 to be able to do that, just out of a little bit of caution. There's no reason to push. And that's something that I am trying to battle myself mentally is, you want to get there. You want to get to the goal super fast. You want to like, let's go. I have to remind myself that we're dealing basically with the financial equivalent of nuclear weapons. The market goes up 8-10% on average per year, and we're dealing with numbers that are like 10, 20, 30% per week. So these are nuclear weapons that we're dealing with, so we have to appreciate the power and the leverage that we're dealing with. If you can just be consistent, and really consistency when you're dealing with this type of risk reward ratio, consistency is your advantage. So you want to be as consistent as possible and not push. You want it to be boring. That's the key. Consistent, boring trading. So you can see here, this particular trade, I actually got too much premium on, and this reminded me to talk about some of the pitfalls with trading with a virtual account. It's really generous on giving you fills, extremely generous. This really should have been a 15-cent trade. And for tomorrow's vertical, if I'm looking at, say, this particular spread right here, this 39.60, and I want to get 70 cents out of this, if I pull this order up, you can see the mid price, the middle between the bid and the ask, which is 30 cents and $1.10. This is pretty wide because it's after hours, but let's say this was real life trading. The bid is at 30, the ask is at $1.10, and the mid is 70. Just because it says 70 doesn't mean you're going to get 70. You'll put in 70 as a limit, and your order is just going to sit there a lot of the times, and it's going to sit there for minutes and minutes and minutes until somebody finally decides to take your order. So you need to be mentally ready for that as well. That's an experience that you really can't get from simulated trading. Okay, so you have to be ready for that. Sometimes you might have to give up 5 cents or something like that to get your order off, or just wait and wait for the market to come to you. We do have the GDP. This is a pretty big number coming up on Thursday, so we don't have that tomorrow. We still got a day before that happens, but this could cause a little bit of chop tomorrow as people kind of position for the GDP. So this is going to tell us technically, are we in a recession or not, or heading towards recession or not, I guess you could say. The definitions of GDP vary, but a lot of definitions talk about 2 or 3 quarters consecutively in negative GDP. And you can see we're coming out of 2 negative GDP quarters. And another number I'm interested in is this new home sales, especially with the interest rate rise and everything like that. Like the housing market is just kind of getting devastated right now, which is expected within this type of environment. You go from like 0 to like 6, 7, 10%, whatever interest rates, all of a sudden it's definitely going to have an effect. So one thing I'm going to add to the Discord, or I plan to add to the Discord, is actually my training class. But I already have a training course that is designed to take a beginner all the way to being able to trade options if you've never touched any of this stuff before. So I'm going to add that so I can add some value to our Discord here for people who may be a little bit intimidated by the stuff that I talk about on the general and not sure exactly what's going on. I'm going to stuff that in here somewhere. So join the Discord so you can get access to that. It's already built out. I just have to figure out how to get it in here. And just a quick reminder to keep your eye on the prize. So what I mean by that, I think I'm a little late to the party, but there was another, I guess you can call it a hedge fund. But this guy, James Cordier, lost $150 million in his option trading fund where he traded for other people because he made a bad trade, like one bad trade. And it just reminds me that, number one, we're dealing with like literally, not literally, but the financial equivalent of nuclear weapons here, right? Like you can blow yourself up in an instant if you aren't careful. And it's not just beginners, you know, like I talk about in here, everybody's got a day with their name on it, everybody. It's just a matter of, do you have risk management in place or not? That includes me. I've blown myself up before, like twice, trying to do this stuff. I'm trying to teach you those lessons so that you don't have to go through that. And that's why I emphasize the stuff that I emphasize. I really do feel like there are no real experts in options. Like there's people that know more, that have seen more situations, all that kind of stuff, that might know more terminology. They might know more strategies. They might know more trades, but everybody can get blown up just the same. There's 2 types of traders. Remember that, 2 types of traders. There's ones who manage risk and ones who don't. All right, that's it. So nobody knows what the market is going to do. Nobody knows where it's going. Nobody knows, tomorrow that the SPX is going to do this or do that. That's why we trade spreads. Because if I have no idea what the market's going to do, I can just be reasonably certain. But the market doesn't care about my reason or how certain I am. Market doesn't care at all. Only thing you can do is control how much risk that you have and your stop loss and all of that stuff. Okay. This guy was on this YouTube video, and I mean crying, like you could feel it, how sad he was. And this is a person that was referred to as the options king, right? The options king. And he sold not covered calls, he sold naked calls against, I think, natural gas futures or something like that. And it went haywire against him. And he had, I guess, $150 million on the line. And that was his whole hedge fund, which is madness, right? So just keep that in mind. No matter how bad you feel, if you have like a bad trading day or you take some losses like I did the other day, if you If the market makes you feel like a fool or whatever, that's the market's job. The job is to make as many people feel as crazy and as stupid as possible. That's what the job is of the market. So don't feel bad or beat yourself up. It literally happens to everybody, right? It's just a matter of how much are you going to lose when that day comes.
Your assimilation to the collective will begin by joining the Even I Can Trade Discord. Link in the description of this video. You will join a tier based on your distinctiveness, or you will join the general area with no economic impact. Excuses are irrelevant.